Welcome back to Business Week here on Arise News. This week we're unpacking one of the most important and misunderstood shifts in African financial future, crypto regulation. Now, according to recent data, around 32% of Nigerians are actively engaged in cryptocurrency, the highest percentage globally driven by currency volatility, limited access to traditional banking, and a tech-savvy population. Crypto has become a lifeline for millions. But with rapid adoption comes a critical question. How do we regulate a sector that thrives on decentralization without stifling its potential? In April 2025, Nigeria took a major step by signing into law the Investment and Securities Act 2025, its first comprehensive legal framework for digital assets. Now, just a month earlier, in February, Nigeria also witnessed the rollout of CNGN, the country's first regulated, privately issued stablecoin, backed one-for-one by the Naira and developed by the African Stablecoin Consortium. Now, together, these developments are reshaping the country's crypto landscape, introducing guardrails while attempting to preserve innovation. So the big question this week is, can Nigeria turn its first mover advantage in crypto into a real catalyst for financial inclusion, innovation, and investment? Or will regulation become a bottleneck to progress? To help us explore this, I'm joined by someone right at the heart of Nigeria's digital finance revolution, Ayotunde Alabi, who is CEO of Luno Nigeria. With over a decade of experience across finance and fintech, Ayo now leads one of Africa's pioneering crypto exchanges, helping shape a safer and more accessible financial system. Ayotunde, many thanks and welcome to Business Week. It's great to have you on the show.
Thank you very much for having me.
Most welcome, most welcome. We have quite a bit to get through. Let's begin with some current realities and real-world needs. Now, as we know, Nigeria currently leads world adoption. As I just mentioned, 32% crypto engagement. Which financial gaps and real-world needs would you say, in your opinion, that crypto is solving best currently?
I think the first thing is, the first point is remittances.
Okay.
I think historically, just from a traditional finance perspective, crypto has helped to unlock the bottlenecks that we've seen in previous times, where it would take anywhere between 2 to 3 days for you to get in a cross-border remittance transaction over, But with crypto, at the moment, that takes less than 10 minutes, and also for a fraction of the cost that would have been incurred if, that gone through the orthodox, banking system. The other point is also an avenue for the newbies, really for the younger generation to take, their investment future into their hands, particularly, around, investing, hedging against, inflation, and a number of other things. And then finally, I think it's also just, an opportunity for young people to be in tune with what is happening with the sort of digital asset revolution, and to, to get themselves involved in either through, from a business perspective or even from a tech perspective. We've now seen a number of new, jobs and new sort of skill sets being developed as a result of the cryptocurrency revolution.
So speed, cost effectiveness, amongst a host of others. Certainly an advocate for it, it sounds like you are. Now, with CNGN in circulation, 66 million tokens across 18 institutional holders, how is a regulated stablecoin improving everyday use, for instance, with cases like P2P settlement?
I still think, it borders on remittances,
okay.
Right? So the eNaira, I can't talk about CNGN without also sort of, giving some anecdotal references to eNaira as well. So there's the eNaira that is, issued by the Central Bank of Nigeria, and then there's the CNGN issued by private, institutions and the consortium of African, cryptocurrency bloc. So the eNaira is supposed to be, the CNGN is supposed to be the bridge between traditional finance and blockchain technology. And so what the CNGN is doing is to help the remittances use case, but from a local perspective. So if you're in the US or you're in, so for example, in Canada, for example, you can have access to, you could sort of trade a pair of CNGN, which also has a 1-for-1 ratio and pegged to the Naira for 1-for-1. You can trade that and then send it to someone locally, and then that person can sort of withdraw that CNGN into Naira and then into their bank account. So it's a bridge between, bridge between traditional finance from a banking perspective and also, the blockchain technology because of its decentralized nature.
So lots of ease there,
yes.
It sounds like it.
Mm-hmm.
Okay, so I want to talk about first mover benefits because that's the first thing that jumps out at you. So we saw A 2025 come into effect in April, which then officially integrated digital assets into the financial system. Would you say there have been some early payoffs? In fact, let's talk about that in terms of first mover advantage when it comes to investor trust, foreign direct investment. What kind of shifts have we seen with that?
Thanks for that question. I think just the fact that Nigeria is only but, amongst a few of the countries in Africa that have now sort of created a framework for, digital assets, I think is something that is a big win for the country and also for, West Africa at large. On the back of the ISA, we've now seen institutions that were on the sidelines now sort of asking questions on how to integrate, with the crypto, exchanges, for example, where I sit. So I think there is more opportunity. It's still a work in progress, the ISA, the implementation of the ISA, as it were. But I think that with that act already being passed into law, it has created some sort of, a foundation upon which the SEC, for example, can sort of work on and create more, more robust frameworks for particularly the regulation of the space. In terms of the foreign direct investments, we've started to see foreign investors also ask check in to see whether they can now come in, because again, what we have at the moment with the SEC is still like an incubatory program that has not been fully fleshed out. So foreign investors are on the sidelines still waiting to see whether, how quickly we can sort of get to a point where we can say now that we have a fully established framework for the space where they can now come in with more clarity, where they can understand with more clarity what the rules are and then how they can sort of participate in the sector. So
would you say this framework is strong enough when we look at longevity, long-term goals?
I think it is. We have a fantastic and a very knowledgeable person at the helm of affairs in the person of Dr. Emomotimi Agama, who did his PhD thesis on cryptocurrency and what it means for Nigeria. So I think that the sector is in a safe hand. What the sector is also expecting is just a timely framework that allows more participants to come into the fray.
All right, that sounds quite promising. Let's look next at let's look comparatively. We spoke about the launch of the CNGN in February that came into effect. When we look at the adoption in comparison with the eNaira CBDC, what metrics would you say we can use to utilize?
Okay.
Comparatively.
Thank you. I think the first is to understand exactly, the differences, as you've mentioned. eNaira is controlled by and issued by the Central Bank of Nigeria, while CNGN is, issued and developed by private institutions and also a consortium of banks. Now, what the eNaira is optimized for is, facilitating payment within the Nigerian space, your bill payment, your utilities payment. That is what it is optimized for. When you contrast that to what the CNGN is designed optimally for, it's for remittances use case, for cross-border remittances use cases. And then also because in the nature of eNaira is such that it is centralized with the CBN. The other difference is that the CNGN, for example, it is decentralized and it could be held by multiple people. So I think that's one of the key use cases and the differences between the eNaira and the CNGN. Also, the eNaira has been dubbed to be a monetary policy tool to help make the monetary policies more efficient. So it is not really and those are the differences. But again, for eNaira, for CNGN rather, there is a leg where you could you could ride on the back of the blockchain technology that is being built on to develop more even complex products for the for the entire ecosystem.
What about cross exchange activity? When we look at that, does this just apply the same way? Because what I understand is you're saying that there are some differences here, so it would apply to wherever it deems fit. But is this both for utilization and cross-exchange activity?
I think it is. I think the CNGN fit into that perfectly. But for eNaira, I do think that there's still. The use cases are quite different. eNaira is just targeted for in the way that it's been applied at the moment is for amplifying and making the payment rails or payment systems in Nigeria a bit more efficient than it is that would otherwise have been with ordinary cash.
Okay, as opposed to, I get that. Let's look at rollouts now. We get very excited about seeing rollouts, but then you also have regulatory pace. A very good example. So we saw the sandbox program, which, welcomed initial exchanges like Busher, but it also paused onboarding players. Let's talk about that situation to start with. What do we need to know about that?
No, I think one thing we've seen that wasn't that was not the case in the past is that the SEC has been more engaging. And I stand here I can tell you, from a position of knowledge, based on the engagement we've had with the SEC, that, I can tell you what the reasons why there's been some sort of delays with respect to that. And that's because when you start a program, you have like a pilot phase that allows you to sort of test, understand, and learn, and then make something more robust. So I think that is what, and just from the engagement of the SEC, that is what have been communicated by the SEC, that they've now taken this time to understand and understudy the first participant in there, to know the pros and the cons and what they need to learn and the gaps. When they fix that, they make it more robust, and then they admit more people, on a broader scale. So that's the feedback we've gotten from the SEC, and that's so the timeline hasn't, been communicated, but we're confident that it will be, in a very short while, we'll see a more robust, RA program or incubatory program that allows for more participants to play in.
So this was certainly a very deliberate, cautious stance for certain reasons.
Yes,
just highlighted.
Yes, definitely.
Let's talk about, we've seen about 80% of crypto flows stay peer-to-peer. How can we, in terms of speed, how quickly, pretty much, can we formalize and taxes flows?
Oh, I think the first thing we need to do, which is just off of the back of the question you just asked about, how quickly that the SEC is working on the program and the licensing. I think the first thing is, the reason why the P2P market is thriving is because in 2021, the reverse was the case. 80% of transactions went through the normal channel, through the banking rails. But then the CBN, sort of put a pause on that, and it forced people to start to look for, other alternatives to transact, and that is why P2P became, something, very popular. Now, what I think that we can do to get us to a point where we can start to tax effectively is to, allow more participants to sort of to participate through the banking rails. Because at the end of the day, crypto is not, digital assets are not going to take away the banks. It is a partnership that needs to continue to sort of work together on a more collaborative level. So I think that what needs to happen first is to allow the transactions that would otherwise have flown through the peer-to-peer channels to go through the banking rails. After that, then we can now start to, understand the volume of transactions going through the banking rails, going through the normal channels, and then we can now use that to tax appropriately. On the part of the SEC as well, no business or no digital asset company would feel the need to pay taxes, for example, if they are not under an umbrella. And that is why one of the things that we are hankering for as a business, and even just as an ecosystem, is to allow for more people to come into the space, so that we are now regulated and bound by the laws that applies to that space.
All right, I'm glad we're talking about this, because this leads me to want to think about innovation in relation to customer safety. Now, of course, we're sort of in the age of sensitization. You are still, educating the public, but there's a lot of risk aversion also at this very stage. When we see scams, smart contracts hacks rising, what are some of the consumer protections that you would say should become mandated to pretty much drop the risk aversion when it comes to trading?
I think the first is education, and which is what we are at the
education.
Yes,
okay.
And which is what we are at the forefront of at Luno is education. A lot of people are not, aware of what crypto is about. The adoption in Nigeria is about just 10% of people know about what crypto is, and so then the idea or what they understand crypto to be isn't what crypto actually is. A lot of people think that crypto is a get-rich-quick scheme. And that is what is informing a lot of, a lot of mistakes, and a lot of people falling into victims of, scams and shams and, Ponzi's that are related to crypto.
But where does that perception come from? Where does the perception that this is a get-rich scheme come from to start with?
Thank you very much. That's a very, interesting question. I think it's just the nature of what has been sold from the start, right? So if you are very active in the space, there's always a day where you're inundated with, stories about people, investing $10 and then they're taking out $10,000 in the next day or 2 days or so. So, and then we are also the generations currently playing in that space is also a generation that, it can be tagged a bit impatient. So all that together with, the perception about all the stories that come out of, crypto is something that, has sort of plagued the image of digital assets essentially. So, and that's where we come in. We try as much as possible to educate people about what crypto is, but more importantly, what crypto is not. It is not a get-rich-quick scheme. It's not a sham. It's not a scam. And then we always advise people before you invest in any asset or token, do your own research.
Right. Well, let's look at investor safeguards now. There is the perception or belief that regulation often means structured oversight. Do you firstly agree with that?
I mean, yeah, well, to some extent, structured oversight, I'm inclined to agree.
Okay, all right. So how do we preserve Ethereum-style decentralized innovation when it comes to enabling, effective KYC, for instance?
No, I think we already are on the path. The first is that, there's already, a framework that allows us to, we're already in a capital market space that is, regulated by the SEC, and the precepts of the SEC also has, oversight around, customer identification, KYC, anti-money laundering, and things like that. So we're already there, and I think that is the way it is going to be. Essentially, we're going to have to, align with the ethos and the precepts of the capital market for us to be able to play effectively. Because at the end of the day, again, if we say that crypto is not a scam and crypto does not, aid nefarious activities, then we need to be confident to allow for people to know that we are doing this. And, you don't have to hide under any shadow, for example, to say that I'm trading in crypto, this is what I do, it is transparent, and I'm not scared or I'm not worried about my identity being revealed to at least the exchanges that I'm trading with.
Right, so it goes back to what you said earlier, education, sensitization, we can't emphasize that enough. But let's talk about transparency, which you just touched on, but specifically tax transparency in relation to clearer crypto regulation. How much could Nigeria expect in additional tax revenues, especially when, the first thing I'm thinking is they're going to integrate crypto into broader financial reporting? What does this mean? I
mean, absolutely. I can't put a number because, it depends, right? It depends on, the number of people or the number of exchanges that have been admitted that are regulated and then are taxable. Okay. And then we have to also determine exactly, what the figure. I know for potentially, the volumes coming through the country, but it is going to be, there's a lot of tax, structures that need to be in place as well, from VAT to capital gains tax as well, to a number of other tax that would border on revenue as well. So I think it remains to be seen. But is there potential for a decent revenue income for the country? I think yes. Okay. Yes, there's that opportunity, but it remains to be seen from a figure perspective.
All right. So there's a clear silver lining there.
Yes.
Well, let's say, overall, in terms of this discussion, from what I hear, it all sounds very positive. Nigeria is shaping regional, norms with CNGN, ISA 2025. Mm-hmm. What lessons could you say that other African nations could take from us at this point? It's always a bit of a chuff to hear that, right?
No, I think it's amazing what we've been able to do in this short while, and I think that. I think the learnings, we also sort of learned from South Africa as well, because again, they were the first to, in Africa to license exchanges. And I think that what is clear is that, the future of any African country is in their hands. And, the world will not wait for us before it continues to evolve. So what the learnings that they can take is to understand exactly what has worked in Nigeria, what is not working. For example, one learning is, for example, if you stifle, or if you block or have some sort of apprehension towards cryptocurrency, it is going to go on anyways. And it is better for, a country to accept that, this has come to stay and then find ways to ensure that it goes through the formal channel. Otherwise, it will continue to thrive, but in an informal way, and then revenues that are supposed to come to the country would have been lost. So I think that they can take that learning, because I think that was one of the things that sort of skewed the transactions from a formal sector before now in Nigeria to the P2P sector. So to the P2P channels basically. So I think that's one key point that they can learn. But also just generally that the future is in the hands of anyone that wants to take it, and you better be ready. Otherwise, the future will sort of leave you behind, or the world will leave you behind if you continue to, drag your feet around where the world is heading towards.
Quite literally. So there's lots to be proud of in terms of our progress.
Absolutely.
Yeah, but you should also be proud of the work that your company is doing, operating the continent's first licensed crypto platform. That's a big deal. Let's talk about how you plan to scale usability and, of course, consumer trust, because that's very important.
Absolutely. I think the first is, I'll take the question from a consumer trust perspective first. I think how we've defined sort of mode of operation in Nigeria and in short everywhere is the compliance first approach. We want to we want to operate from a global best practice perspective in terms of compliance, and then to interest you to know that the bulk of over 20% of our workforce are in compliance in different areas of compliance, from anti-money laundering to financial crimes detection to everything that we do, basically because we're a compliance-first company. The second, in terms of, so that is how we hope to continue to earn our customers' trust. The second is also just the reach and the highly talented team that we have, from the board of directors to just the quality of people that we hire. And then on your question around in terms of usability, I think we are the first in Nigeria in terms of just coming into Nigeria. We're the pioneering exchange in Nigeria. That's one. Secondly, most beginners and even the more developed traders now in the country started with Luno, and that is what we've prepared ourselves in to ensure we make investing in crypto very easy. It's like ABC, and we have dedicated resources on our platform to teach people about crypto, what crypto is, and I keep saying what crypto is not, so that people don't fall into the belief that it is a get-rich-quick scheme. So we make our platform very user-friendly, and then anyone can sort of join as long as they have all the requirements that we need for them to sort of trade.
All right, very impressive work, and of course the sensitization, as we've highlighted here, is very, very important. If you're just joining us, I've been chatting with Ayotunde Alabi, who's CEO Luno Nigeria. Ayotunde, many thanks for joining us, and we'd love to hear more about your progress.
Thank you very much for having me.
You're most welcome. Well, that's all we have time for today on Business Week. I am Abby Owolawi. Let's continue this conversation on X. Do have a lovely rest of the weekend.